Hey, thanks for joining today. Um, today's video, when to get out or when to trim, I guess might be the best thing to say. Because I'm in a winter here and I have been for a while. I got in right around here and I'm up 160%. I realized this on Thursday and then Friday the market was closed. And anyway, so I was determined and I sold right at the opening this morning. So this is Sienna. I was up 160% from here to here. This is a massive compounder. It's a fantastic company. Stocks really working, very strong. Big days up, and and you have some days that are down. So if you look at today, uh, here on a 5 minute chart, right when it opened, down. I was out. It was already planned. But um, so I did it with a plan. Now I didn't sell everything, but I shaved off quite a bit because I was up so much. Because I don't want to have um, being a winner and then watching it fall. We're doing the consolidating, zigzagging, and whatnot. I don't want that. So that's what I did. So anyway, so some investors, they have a plan to get in. Indicators telling them, okay, it's starting to climb. So they jump in, that's great. But you got to have a plan to get out. You got to hold on to some of those profits. And if you don't, that's really where the real damage happens. I have rules in place. Ideally, I got to be over the 200, the 100, the 50, and there's the 20. And right up here, it was extended. This stock's been extended for most of the year. Um, so far away, 20% over the 20-day moving average. That's a lot, and gravity's going to pull it back down. And it did it here. So my plan is if it comes back down, and I believe it will, I'll just rebuy and just go up again because that's one top, second top, extended big time here coming down, and it's probably going to bounce maybe off the 20. If it goes down below the 20, it's going to be right around here. The 50 will be coming up. I hope it's a perfect time to get back in if everything lines up correctly. So that's what I do. So if a stock falls below the 20, I pay attention. Uh, Below the 50, I take a little more seriously. Uh, Below the 100, uh, the trend is weakening, and if it definitely the 200, it would not be on my radar at all. I just, I don't like to hold things that's below the 100. That's 3 months of sideways and recovery and whatnot. I don't have the patience, and there's plenty of stocks to buy, and so I don't like to write it all the way down. I've done it before in the past, and it's no fun. So I put rules in place, and what I did buy in return, although my indicators say to hold, is Howmet. That one I believe is ready to go. So I added on today, and I do think it's it went up here to touch back down again. So now I think it's going to give it another go. I'm profitable on this one. These are compounders. These these stocks just go. So let me go over to where my indicators are. And Howmet, if you don't know what they do, airline, uh, the blades and all the airlines, they have to go to, uh, there's only certain people that do these things. So I don't want to put them in the moat category because I know there's other companies that do things as well, but they are a very, very good company. So that's what I'm hoping for. And today's an up day, and the other one, Sienna, is a down day. So there you go. So I'm happy with what I did. So with my indicators, So we look at the Sienna here, and I have these ranked, and here it's overextended. So right now, even on a down day, 3% down, I think it is, right? It is 13% down. I mean, 13% above the 20-day moving average. And I bought Howmet, and they are a tad below, but I think it's a good candidate to jump in. So right now the 20-day average is 238, the current price 36. I'm comfortable with that. And like I said, so I own it. So um I didn't want to wait around for it to flip. So here I have my buy singles that's buy all the way across. Year to date, 76% for 5 years. This is a heavy compounder. And like I said, I'm up 160, and I'm happy shaving something off when it's that high up. And I'm glad it did because it came down a little today. So this is what I go with. On here, I have my change done from the previous plus or minus from the previous day. Where buys all the way across. And then, we have some things that'll be selling because this just fell below the 20 and so on. And on my uh, command center, I got a lot of stuff on here. But if I look at, well, see here we got Howmet. Let's just go here. And right now it says watch. So on my list that proper stocks that I'm keeping an eye on. Clearly, if it's a hold, you do nothing. If it says add, if you want to take a look at the chart and then you say, okay, yeah, I'm ready to, pick up a few more shares or whatever you think on. And then if it comes down and says steal, that was one of the examples I didn't catch on. So that is right here. So that is below the 20, below the 50, going down. Here is that. Now it's done this before, and I had the box there. So just remove that so you can see it clearly. Big 5% down. That's quite a bit. So what else we got here? We have the flips, the ranking, compounding. So here, this is the 5-year compounding that the stocks I like to hold on to. And I'll hold on to it. I don't sell out of everything unless it's broken below the 100, heading towards the 200. But here, how about? So the CAGR, almost 50%. These are good stocks. These are stuff that you want to kind of hold on to. I would like to get some Coca-Cola. I think that'd be a good one. 46%. I do have Comfort Suite. I do have NVIDIA for a long, long time, and that has done, everybody knows it's done extremely well. So that's the 5-year CAGR right now, 65. So I'm pleased. Kind of scroll through a few more here. And it kind of jumps up. So these are on the rockets. Anything that might be 30% or higher CAGR is here. I have them down as rockets. And then I have the excellence. And this would be from between 20 and 30%. And then we have strong. So I guess I got to sort it a little bit better here. And so we kind of see, where it's at. So if we looked at DICK'S, for example, it's okay, but you really got to look at the charts. Let's take a look for fun. DICK'S. what's it actually doing? Well, today's a big day. I didn't realize that, but it's up. So now we have the reverse because this was in a downward pattern. So it did the first leg. This is a good one to keep an eye on, I think, now, because it's over the 20. So say tomorrow or Wednesday, today's Monday, say by Wednesday, it has a closed bar above the 50. It could be a possibility for some. I myself, I don't buy unless it's over all four uh, moving averages, and it has to be over the SPY, which is like 4% right now, and this one is better. So personally, I would not buy until I'm over the 200 because that very well could be resistance. There's been resistance before, went up, but it didn't hold. So there's too many stocks to buy. And I only hold onto, what do I have? This is what I have. NVIDIA says is a sell. I'm not selling NVIDIA. My own spreadsheet can tell me what to sell, but I'm not selling. And then Sienna said hold. Um, a couple of days ago, it said add. So I had an A there to kind of remind me what I'm looking at. Because pretty much, I don't look at the stocks every day. Uh, and if I went to the charts every day, then I would be tempted to do something. So I like to do it with some thought. That's why it took from Thursday to today to sell Sienna or trim Sienna. Um, I do better with that. Um, but like I said, I was determined to sell. So this is what I do. This is all I have. I don't want to own 15, 20 stocks. Although there's a lot of good stuff, and a lot of stuff that's, done well. $34 up today, Seagate 23. That's fine, but I don't want to own everything. And this keeps me in line and it makes me profitable. So that's when it's time to get out. Alrighty. Thank you.